Welcome to Smart Stock Watch. Today is October 20th, 2025, and we're diving into the latest earnings report from Cleveland-Cliffs, a leading North American steel producer. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Cleveland-Cliffs has just released their third quarter 2025 results, and there's a lot to unpack, from their financial performance to strategic initiatives in the steel and rare earth sectors.
Revenue and profitability overview. Let's start with the financials. Cleveland-Cliffs reported revenues of $4.7 billion for the third quarter of 2025. How does this compare to their previous performance, and what are the key highlights?
Revenues were slightly down from $4.9 billion in the second quarter, but the company managed to reduce its adjusted net loss to $223 million, or 4.5 cents per diluted share, beating the analyst forecast of 48. Their adjusted EBITDA also improved to $143 million from $94 million in the previous quarter, indicating better operational efficiencies.
Strategic initiatives and market position. John, Cleveland-Cliffs CEO, mentioned a demand recovery for automotive-grade steel. Can you elaborate on the strategic initiatives that are driving this recovery?
Absolutely. The CEO highlighted the impact of the new trade environment, which has bolstered demand for U.S.-made automotive steel. Cleveland-Cliffs has secured multi-year agreements with major automotive OEMs thanks to their reliable supply chains. Additionally, they've entered a memorandum of understanding with a global steel producer, which could be highly accretive for shareholders.
And what about their focus on rare earths?
The company is exploring opportunities in rare earths at their mining sites in Michigan and Minnesota. This aligns with the national strategy for critical material independence and could diversify their revenue streams beyond steelmaking.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Cleveland-Cliffs has made some adjustments to their guidance. What are the key changes?
They've reduced their capital expenditures guidance to $525 million from $600 million, and SG&A expenses to $550 million from $575 million. These reductions, along with a 50 per net ton reduction in steel unit costs, reflect their focus on cost management and operational efficiency. Their liquidity remains strong at $3.1 billion, providing a solid foundation for future growth.
CEO's vision and market challenges. The CEO, Lourenco Goncalves, shared his vision for the company. What are the key takeaways from his statements?
Mr. Goncalves emphasized the demand recovery for automotive-grade steel and the strategic advantage of operating in the U.S. market, which is now less susceptible to dumped steel imports. He also highlighted the potential of rare earths as a strategic focus, which could align Cleveland-Cliffs with national interests in critical materials.
Key takeaways. In summary, Cleveland-Cliffs has shown resilience in a challenging market with improved profitability and strategic initiatives that position them well for the future. John, any final thoughts on their investment prospects?
Cleveland-Cliffs is navigating the current market dynamics effectively with a focus on cost management and strategic growth areas like rare earths. Their strong liquidity and reduced capital expenditures provide a buffer against market volatility, making them a company to watch.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cleveland-Cliffs' performance in the comments below.